For this video, we're now going to discuss the Schedule M for Form 5471. So Schedule M are the transactions that occur between the CFC and shareholders or other related persons. So who needs to file this form, and effectively what is this designed to do? So Schedule M really is designed for just additional disclosure, right? So the IRS wants to know what kind of related party transactions are happening between the CFC and not only the shareholders, but any other companies or persons that are related to those shareholders. And so we'll look at a few of the transactions that occur in this CFC and how that's all reported. So Schedule M, so who needs to file this? Again, in our case, we are filing it, but if we go back to our required information table within the form instructions, if we go down here to separate Schedule M, we can see that Schedule M is only required in one context. So it's required for Cat 4 filers. So if you find that your U.S. person is one of these other categories and they're not a Cat 4 filer, then you don't have to do Schedule M, right? You can leave that blank. But in our case, remember, John, the U.S. person here that we're filing this form for, he is almost all of these, right? So he's definitely a Cat 4 filer amongst all the others. And so for those reasons, we're filing Schedule M. Okay, so if we go back to Schedule M, let's talk about some of the basics and how this form works. So obviously we have the name of the person filing the 5471. So we got John Q. Taxpayer, the name of the foreign corp, and then the ID numbers. So we have John's SSN, and we have the reference ID number for the company. And at the in this section here, not the bottom, in this section we have the exchange rate used to translate the schedule, right? So this schedule, like a lot of others, it has to be expressed in US dollars. So you do not use the functional currency amounts here. You use US dollars. Remember, our functional currency is the USD, so our exchange rate is simply just 1.0, right? We're not translating from euros or British pounds or pesos or anything like that, so we just have USD 1.00 for the schedule. Now the form is broken out into kind of two sections here. So lines 1 through 15 and then lines 16 through 30. And then there is a page 2 here, lines 31 through 34. So lines 1 through 15. These are the line items where you report inflows of money, right? So if the corporation is receiving money from one of these persons in columns B through F, the receipt of money is reported here on lines 1 through 15. When the corporation pays money out to a U.S. person or related party, those amounts are reported on lines 16 through 30. Okay, so just to recap, if the corporation is receiving money, so it's recording income, let's say, and it's from one of these U.S. persons, those amounts are reported up here. If the corporation is paying money out, you're going to see them on lines 16 through 30. So if we go back to the financial statements here, remember that what's happening here is the corporation paid John, so John's a shareholder, $1,000 to serve as an officer and director of the company. So that is an outflow of money from the corporation to John. The corporation also paid accounting fees to a company that John owns, right? So it's an affiliated party in that regard. And remember that the corporation paid out dividend distributions to John and Jane's Bermuda Holding Company, and that amount of dividend was $5,000 during the year, 75% of which was paid to John because he's a 75% shareholder, and the remaining 25% was paid to Jane's company. Now, these three data points are relevant for Schedule M because those amounts are paid to related parties of the company, right? So we have a payment to John, who's a shareholder as an officer and director. We have a payment to John's accounting firm, and then we have the dividend distribution that goes out to a U.S. person. So keep these three numbers in mind, and that's what's going to be reported on the Schedule M. So we've talked about Schedule M here. The lines 1 through 15 are inflows of money. 16 through 30 are outflows of money from the corporation to a related person. So notice here that none of the income from the corporation is from related parties, right? They're trading stocks and bonds. They have dividend income from unrelated parties. So that's why we see no entries here on lines 1 through 15. If your corporation does have inflows of money from the U.S. person filing this form or any other kind of related party here that meets the definition in columns C through F, then you might have some entries up here. But in our case, we just have lines 16 through 30 to populate. So the first one, the U.S. person filing this return. So this is John, right? So column B, pretty straightforward. So anytime you have an inflow or outflow of funds between the corporation and the person filing the form, so the U.S. person here, you enter that information in column B. So on line 21, we can see here compensation paid for technical, managerial, engineering, construction, or like services. That's the $1,000 in compensation that the corporation paid to John to serve as an officer or director. So we have $1,000 there. The dividends paid, line 25, that's John's portion of the dividends. Remember, $5,000 was paid out. Of that amount, 75% was paid to John as a 75% shareholder, so he gets $3,750 in dividend income. We see this number on the other schedules, right? So the PTAP reconciliation on Schedule J, Schedule P, and then Schedule R as well. So that's the $3,750. And then column C here, any domestic corporation or partnership controlled by the U.S. person filing this return, right? So remember, if we go back to our structure chart here, John is the U.S. person filing the 5471 for his ownership in this company, and he controls 100% of this accounting firm in the U.S., which is a Delaware corporation. So he controls this entity. And so that entity very clearly falls within this category here in column C, any domestic corporation or partnership controlled by the U.S. person filing this return. And again, there's nothing wrong with deducting these costs, right? Just to be clear, as long as if it's a related party transaction, as long as the terms of the payment are made in good faith and it's consistent with what you would see kind of in the third party market, right? So these are the transfer pricing rules. There's nothing wrong with making the payment and deducting it. The IRS just wants to know specifically that the payment was made in that context because it's a related party. So that's why in column C here, when we have this same thing, compensation paid for technical services, we have the $1,500 accounting fee, right? So that's the accounting fee here paid to John Accounting Inc. $1,500 is reported here on line 21. And so at the bottom of the form, you just put the totals here, and then this is everything that needs to be disclosed for this specific fact pattern. Now, the rest of the columns, D, E, and F, right? D, any other foreign corporation controlled by the U.S. person. So John had an interest in another CFC, let's say, and he was the controlling shareholder, and there were payments between the companies. You might have those payments reflected here. Column E is a 10% or more U.S. shareholder of the CFC if the payment was made to that person. And then column F, 10% or more U.S. shareholder of any corporation controlling the foreign corp. Right, so if you had a separate corporation controlling the CFC and you had payments made to that entity, then perhaps you might have additional disclosure there. But again, very simple example here, right? We have the payments made to the U.S. shareholder, a dividend payment, and then a payment made to an affiliated corporation. So that's why we have those amounts disclosed. Now, the second page here, these are really just related to loans, right? So in this context, remember, if we look at the balance sheet here, there's no debt on this company's balance sheet, nor do they have a receivable from a shareholder, right? So there's no loans from shareholders. There's no loan amounts out to shareholders. And so Schedule M, this section, is effectively blank, right? So we don't have any kind of related party debt. So if you have Accounts payable owed to a U.S. person, you might have balances there. And again, amounts borrowed or loaned out to. In this context, no, we don't have any of that, right? So there's no related party debt or related party accounts payable, so that's why these line items are blank. Okay, so that covers it for this video. Now we will move on to the next schedule.